This is Scott Becker with the Becker Private Equity and Business Podcast. Thrilled today to visit with Rick Kes. Rick is a partner at RSM. Rick's one of our most listened to guests, and he speaks often about trends he's watching in the private equity world and markets. Rick, take it away. Tell us what you're seeing right now. What are the big trends or issues you're following currently?
Probably not a surprise to many, but, right now, I'm very much interested in the interest rate environment and kind of where that's headed and where the Fed will stop, I guess, increasing rates. But, that's probably one of the biggest things. And then I think secondarily, probably just, kind of the ongoing, questions around labor. For many of our clients, labor continues to be a big challenge for them, despite kind of all the, headlines we hear about, big companies laying people off and all those things. We haven't really seen kind of that effect where those people are kind of redeploying themselves kind of in the middle market yet. So, I think we'll continue to kind of monitor as we see, those people find new jobs and ideally come to organizations that, we kind of serve in that middle market space. But I'd say it continues to be interest rates and labor for sure.
Thank you. And in terms of the labor issues, what's fascinating about some of these layoffs is, for example, when Amazon lays off 9,000 people or 18,000 or 27,000 people, that is out of 1.5 million employees. So there's sort of, in some ways, obviously, if that layoff affects you, it's a big issue. But many of these layoffs are sort of virtue signaling to Wall Street that they're getting more careful about cost versus necessarily big swaths of people. And so you're right. It doesn't seem like that's making it that much easier for employees to find people, because even though they announce all these layoffs, they're not the kind of numbers we used to see decades ago, where it was huge percentages of companies. And I'll give you a counterexample. Is Lyft laid off 25% of people, but it was only 1,000 people because they only have 4,000 people at headquarters. So it will have a big dent in that area, but not necessarily throughout the entire country's economy, 330 million people. Interest rates. It seems like interest rates are close to being at a pause. Will that be helpful for the private equity deal market? What's your sense of that?
Yeah, I think it would be helpful. I think, anytime there's certainty, I think certainty helps people make decisions, right? Like, I think it helps them think about the future and model that out in a more kind of fair and particular manner where, I think when there's uncertainty, they're pricing in and evaluating, the risk of uncertainty. So, yeah, I think anytime you can sense some sort of understanding of what the direction is, where the top of the number is kind of thing, and feel like we're there. We've made it and kind of thing. And then, if anything, we're maybe start to see some reduction. I think that type of certainty will definitely help, as, a lot of the interest rates that, some of these private equity groups are dealing with are, perhaps fixed for a period of time, but then start to float. I think having some certainty with that is definitely going to help kind of make decisions and help people feel comfortable making those decisions.
There's also more discussion about a potential quote-unquote credit crunch. What's your sense of that? Is credit getting harder for private equity funds to get to support deals, or not seeing that yet?
Yeah, I think definitely kind of on the lower end of the middle market and assets that maybe aren't as, robust or, well-oiled machines. I think those become, harder and harder to find credit. I think if you're a business that, has a track record of really, really good results, a great business model, a great leadership team, you're still able to find credit, maybe at a rate that you're not finding desirable, but somebody's still willing to lend you money. So I think that the high credit quality assets are still able to find good credit. I think the ones that are a little less stable, perhaps those are the ones that are having a little bit more difficulty from our perspectives tends to be.
Thank you. Any specific things you're watching in the healthcare deal market that you want to talk about?
Yeah, I mean, I think in healthcare, there's a lot of headlines out there about, whether it's, some of the larger insurance companies, having issues financially, some of the startup insurance companies out there, and then some of the, health systems that are continue to merge and to, try to find economies of scale. I think when those larger deals happen, kind of the next tier down is maybe some of their ancillary businesses or some of their joint ventures that they had start to kind of become, opportunities for either investment or, opportunities to de-invest. And then, for those, joint ventures to perhaps spin off and kind of do their own thing. So, I think as, those larger deals kind of grab the highlights and the headlines, I think, kind of the next tier down from that, really that, kind of core middle market business is probably a good opportunity for people to think about, like, how could they plug in, whether it's a private equity group thinking of maybe buying some of those ancillary businesses from these health systems that are combining and saying, hey, you don't need two home health agencies now. You only need one, like let us buy the other one or whatever, right? So, I think there's opportunities there as these larger organizations try to figure out how they play together. And maybe some of those larger organizations having some financial difficulties that, private equity and other investors could look to say, well, perhaps we can make some of these problems, go away for you by buying these assets or what have you, and, give you some short-term financial results, but also let you focus on your core, and we can kind of find opportunities to maximize opportunity out of these things that you weren't, maybe as closely focused on.
Thank you. And anything else you're most excited about as we head to the second half of this year?
Scott, as you know, I live in Minneapolis, so I'm excited that it's May and the snow has melted, and that we've got summer coming around and it's baseball season. So yeah, I'm very excited about the weather. It's much better today. The sun's out and life is good here in the Twin Cities. But from a professional perspective, I'm excited about just continuing to see if we get some certainty on the interest rate environment, and perhaps some perspectives there that some of these deals that we know are close to happening, or maybe put a pause on for a while because of uncertainty or other impacts. Maybe some of these things can start to kind of come to fruition throughout the rest of the year, and then hopefully close out 2023 in a good spot. I don't think anybody expects it to be quite like 2021 or the first part of 2022, but yet could we get to a spot where we see a deal flow and environments kind of similar to maybe 2019 or something like that. So I'm still excited. I'm still thinking that there's an opportunity out there for these deals to happen, and to for private equity investments to kind of continue to build and grow, and we'll just continue to see how that matures.
Thank you. And Rick, I'll ask you one more question. You're in Minnesota, which for those of us in the Midwest know, and many others know this too, it's the land of 10,000 lakes. And so the question I guess I have, Rick, which is, we know Wisconsin's America's Dairyland, Minnesota's a land of 10,000 lakes. Has anybody really counted that? And how directionally accurate do you think that is?
Well, yeah, I've definitely seen a lot of reports on that as a Minnesotan, born and bred, never lived anywhere else in my life. The true number is probably closer to 12,000 is what we've heard as Minnesotans. So we think that number is a little underreported, a little conservative, but that's not any surprise, knowing generally Minnesotans tend to be kind of conservative in nature when it comes to, trying to boast about their own, results and things of that nature. So, I think it's a little underreported, but, there definitely is a lot of lakes. I mean, I think one thing we also always hear is that we have more waterfront property acreage than California and Florida, which seems mind-boggling to me and impossible. But that's again what we read when we read stories about Minnesota and what we're told as we grow up. So again, not sure if it's true. Don't quote me on that per se, but apparently we have a lot of waterfront property available too.
And for sure, the most hockey rinks per capita, I would think, in the United States. Rick.
Yeah, I mean, I think
always,
every single person has one. So yeah, I think that's true.
there we go. Always a pleasure to visit with Rick Kes from RSM, one of the great sort of consulting accounting firms that works with the private equity industry. Just phenomenal practice they've built. Rick, thank you so much for joining us.
Thank you, Scott.